we got a downgrade. Fitch downgraded government debt this week. And some economists are treating that with alarm, and others, including strategists, are treating it with a yawn. And the truth is probably somewhere in between, as is usually the case. It really is a sign that our spending, the government spending, in the last 5-6 years has just been out of control. And my reaction to it is, hopefully this is a warning to the legislature and politicians generally that, the spigot is going to have to stop. And it's interesting, as I look in the GDP accounts at the government line, it's actually shrunk as a share of GDP, and most of the spending is not in the GDP report. GDP is production of goods and services in the U.S. economy. And a lot of the spending has moved off into social programs, which are not part of GDP, like, say, defense would be. So I think that topic is going to gain a lot of currency. Maybe they'll skip through it over the election year and campaign season, as they usually do. But I do think Fitch is warning us that we're going to have to deal with this issue in one way or another.
Hello and welcome to Money Talks. In today's video, Cathie Wood gives us an update on her current macro thesis and her perspective on current global market conditions, also her prediction for Bitcoin and crypto, and where she thinks the market will go in the next months. So let's get started with the video.
The other thing that happened that was kind of interesting from a fiscal policy point of view, especially now that we've entered the election campaign season, was movement on crypto legislation in the House. Now, we don't think it will get out of the House because Maxine Waters is head of the Financial Services Committee and is not pro-crypto. But crypto, or as Art Laffer would say, could you please use a different word, like digital assets legislation? We do think that it will become an election year issue. And the fact that it's even stirring in the House at this point in time and becoming a conversation, we think is going to work to the benefit of crypto. And what's very interesting is, whereas we thought we had a bipartisan issue in crypto, the side seemed to part, especially with Elizabeth Warren siding with the banks, interestingly and unbelievably, that we need to be very careful in this realm. We should not trust it. So we thought there was a partisan divide evolving, but we are seeing some Democrats coming back to these bills. There were two that were voted. Well, one has been voted on already, and it got 6 votes from the Democrats. And the next one, that one was on market structure. The next one is on stablecoins, and apparently that will have many more than just 6 votes from the Democrats. So this could become, yet again, a bipartisan issue, which we think it should be. Innovation solves problems, and this crypto legislation would really put in place the layer of the internet that no one contemplated in the early days of the internet, because it simply was a place to exchange information. Nobody thought about commerce or financial services. And so we think it's important, and it will take a lot of the cost of financial services out of the system.
In its recent report titled The Bitcoin Monthly, July 2023, ARK Invest, a prominent market insights firm, has analyzed the current state and potential future of the Bitcoin price. The report suggests that Bitcoin's price might be on the brink of a significant change due to striking similarities with patterns observed in 2017. However, it also reveals a concerning 4.1% drop in BTC, the lowest in 6 years for a month. With such low volatility, investors are left questioning whether we're headed for a bull run or a bull trap. The report's author, David Puel, an on-chain researcher at ARK Invest, provides a thorough analysis of Bitcoin's current status and future prospects. Low volatility. The report points out that Bitcoin's volatility has been relatively low over the past 90 days, similar to levels seen in 2017. Puel says such extended periods of low volatility have historically been followed by periods of increased activity, although the direction of this potential price movement remains uncertain. Miner dynamics. It is noted that the decrease in hash rate, known as miner capitulation, is considered a potentially positive signal. It could indicate oversold conditions and potentially hint at a bullish reversal. Additionally, he said the increase in liveliness, reflecting fewer holders selling their coins, is seen as a positive sign. Short-term holder ratio. Whereas his report says that the ratio of short-term holders' profit-loss is linked with historical trend reversals. This could potentially support a bullish scenario, as this ratio has correlated with local bottoms during bull markets and local tops during bear markets. Macro factors. Puel is also sure that the Federal Reserve's interest rate hike could influence Bitcoin's appeal as a non-inflationary asset, particularly if there's a potential slowdown in CPI inflation. Binance's role. Moreover, the ongoing SEC case against Binance, a major cryptocurrency exchange, could also disrupt the market. Binance provides significant liquidity for Bitcoin through its native token, Binance Coin, BNB. Legal challenges could potentially lead to market instability. As Bitcoin is currently hovering around $29,139, breaking through the critical resistance at $29,450 could play a pivotal role in shaping its future growth. At this point, it may determine whether Bitcoin experiences a sustained breakout or continues its consolidation, particularly given the recent week's downtrend.
Bitcoin is the first global, private, meaning no government oversight, digital, rules-based monetary system in history. It's a very big idea. Art Laffer is becoming very excited about this notion that we could be going back to a world of private money. So before 1913, when the Fed came into existence, money was private. And we've done a podcast. You can look for it on our FYI podcast about this period of time. And while I have always thought it was characterized by booms and busts, and it was, what Art says is those booms and busts happen very quickly, 6 week periods of time before they clear up. The booms and busts that have evolved since the Fed took control have been many years in the making, and then when they happen, they are extremely destructive. So just putting in a plug for that. Anyway, on monetary policy this time around, Chairman Powell, in his testimony to Congress, basically used the word restrictive to describe monetary policy. Which is a big step, I thought at least. And he wasn't thinking about it in terms of the money supply. And as you know, we've been talking about the money supply falling on a year-over-year basis. And in fact, if you go back into 2021, you'll see that the money supply really hasn't gone anywhere in 2 years. This is extremely unusual and negative year-over-year, as I've said on all of these calls, since M2 growth turned negative early this year, that we have not seen since the 1930s. And we've also seen a collapse in banks' willingness to lend. They're very worried about the health of the economy, and they're facing even more capital restraints, we've learned in recent days.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.